let's have a look at the streaming business. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We can find streaming under the Megatrends. You can see that the average performance is monstrously outperforming the S&P 500. Streaming is one of the trends that are doing pretty well. 289% average from the lows. And these stocks are more pure play streaming companies. We will look at Roku in this video. They are one of the top performers, 711% from the 52-week lows. Clearly, that's pretty darn good. Let's now, look, a bit deeper at this company. So this is the company's website. So let's, look at this. How does Roku work? So it makes it easy and affordable to watch your favorite TV. It acts as the home for all of your entertainment, so you can streamline your setup, replace your expensive cable equipment, and watch what you love. This is, obviously a very strong megatrend. Very powerful. People are cutting the cord. This is the future. If we look at the seasonality of the stock, we don't have that many years, but what we do have is, so far, February tends to be strong, but for some reason March is the weakest month. So that's relevant information. Here are the weekly data points, all the data we have, and this is very important. Whenever you are considering your positioning for a stock, look at the long-term behavior, because any kind of security, they kind of have their own personality. The personality of the Roku stock is that it moves in these waves very clearly. This isn't necessarily a buy the dip kind of stock, because the dips can be quite significant. I mean, this was minus 62%. I mean, that's a lot. From this high to this low here, minus 65%. Wow, that's significant. And this happened gradually. Okay, this wasn't like the lockdown. I mean, if anything, Roku is one of those that people were bullish on given the lockdown. But this is the behavior. So let's look at some of the previous rallies. So from this low to this weekly high, and from we should take the close price and to the current price. Okay, so here 527% over 259 days. Here we have 500-ish% over 329 days. Let's just for good measure take this one as well, just for comparison, like that. But you can see that there is a trend here, that there's a certain limit to how much it goes up before we should suspect that maybe some mean reversion is on the horizon, because the long-term picture is that. Looking at the RSI, this is definitively in the risk zone. And when we look at the accumulation distribution, which measures whether there is a predominance of buyers or sellers, we do see that there is a bearish divergence. Bulls are, though, from a charting perspective, still in control. That's something we just have to respect. If you look here at, let's quickly get the correlations, so 90% here with the S&P 500. So here are the daily data points. Let's load way back. So this here, the PPO, shows the distance from the 200-day moving average in red. And this is one of the higher levels we have had, one of the highest levels. If you look at the previous time where we did actually have a higher PPO, that was this. And then we did see, a rather significant pullback from the high. This pullback was, minus 13%. And you can see here that throughout this entire rally, the 50 in green and the 20-day moving average in purple have been, the primary support levels. So that is, a level to potentially buy on a pullback. Looking at RSI, also here in the risk, the higher risk level. The accumulation distribution does show that this recent rally, we didn't have It's been on lighter buying volume than we had back here. That's an interesting divergence. Okay, 93% here correlation, very strong on the daily data points. Let's now go to Finviz. We see these trend lines. We did test the upper channel here, pullback, upper channel now tested. We see a little bit of a pullback developing. Options are available, hence putting on a bearish position here, it is you can limit your risk by going into the option market. So what I like to do is that I look at the analyst price target. So that was 300 and this specific price. And if we look at the current price here for Roku and we calculate the difference, they suggest a minus 32% downside. The reason why it is very important to look at the analyst price target is because if the price target is significantly lower than the current price of the stock, it means that it will be very difficult for institutions to allocate money into buying Roku shares, because mutual funds and also ETFs, they do have fiduciary responsibilities, so they cannot do reckless things. Hence, when you have a stock like Roku that is way above the average target price, then it is very difficult to make that case that, okay, we should buy more shares here of Roku. So that's something to take into account. Looking at Saks.com, number 2 buy, F value, A growth, and F momentum. So certainly a bit of a mixed message here from Saks. What is interesting in those cases is to compare it against others. So if we look here at the current average broker recommendation, in this instance, a lower number is better, okay? We do, of course, have companies here in broadcast, radio, and television that aren't really streaming companies. So here we have Roku. They have a 1.96. One of the closest competitors here, Netflix, you see it has a significantly better, average broker recommendation. Fubo TV actually has a better score here than Netflix. So yeah. So basically, okay, when we take the evidence together here, the theme, I'm very bullish on the theme streaming long term. But the thing is that people, investors have been aware of this theme now for quite some time. So there's been a lot of money that's been pumping into these stocks. Hence, that increases the probability that there will be excess to the upside, You can have excesses to the downside when there's too much pessimism and the stock becomes undervalued, but also you do have the opposite situation, and you could make a very strong case that we currently have that for Roku. Hence, looking long term, years into the future, I'm definitively bullish on Roku. Looking at the coming months and weeks, I can't help myself, but when we look at the aggregate evidence, I think you could make a relatively strong case for some bearish or profit-taking strategies. We did see that there were some key levels to potentially buy on a dip if we see support. That would be the 20-day moving average and the 50-day moving average. But yeah, the key thing is that you want to buy low and sell high. And when you have a stock that has gone very much to the upside, very excessive, then that is a high risk situation for bulls. Similarly to how if a stock is very suppressed, it is down big and has become very undervalued, then that is a very high risk situation for bears, because those who are still, short, even though, the fundamentals look really good and haven't been that good in a long time, they've put themselves in a very vulnerable situation. And if we look here actually at the short float here for this stock, 2.73%, that's very little. So you could simply not make the case that there's like a short squeeze left that could push it even higher. In this, specific case with Roku. Okay. Whatever you do, of course, you want to let the trend be your friend and, think about, the bigger picture.